Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado. As always, with me is Barrie Hederachi. How are we doing today, Barrie?
Doing great, doing great.
You had a
Resting a
good
little bit
week?
after a active week, right?
Yeah, I was going to say you had a good week, so resting up for the next round of action that we expect to see coming up. And we do expect to see action. The charts are creating formations and sending signals that things will be active, things will be volatile, and we'll have some volatility, which is all traders, a friend for all traders. If you have the levels and you know what you're doing, volatility is definitely your friend. And speaking of volatility, here's the poster child for it, Bitcoin. Some activity in Bitcoin this week, China banning the use of it, outlawing it. Not surprising, considering they want to bring out their own digital currency. Last week, what happened this past week is, more of the same, but with a little bit of a bearish tilt. We've started testing this full square here. And once we lose that full square, it'll be full on bearish mode. We failed multiple times up here at the half square. So while I was bullish, once we got above here and we're in this section here, this last section is kind of turned the sentiment for me to, if I was trading it, looking for sells then as opposed to looking for spots to buy. Where are you on Bitcoin now, Barrie?
Well, I think, I've been rather bearish, not as bullish. And here, I think the cutoff for me would be around 45 to the upside.
So basically breaking this trend line would be, huh?
Yeah, that would get us about 45. Where is that? 45? It's up in that area, right?
Yeah. This is 45, right 46.
I think if we can crack 45 to the upside, we have another shot at testing the upper side of this range. Yep. 52, 53. But I think more importantly, if we take out 39, pretty much our lows, right, from last week.
Right, this 1/8.
Yeah, I think it's probably a straight line to 30. So maybe not a straight line, but probably within that trend line.
With this one, it's pretty fast.
Pardon me, yeah, trend line is pretty fast, and 30 is right around where your other lows are. That entire, what about 3 or 4 lows right in that 30?
Yeah, this structure here.
Right there. And prior to that, early 2021, lows came in around 30, right? That little spike. So I think that's the key level to watch, which is about a quarter of your square, really. That's what that number is. And yeah, I think that's the next stop. And don't forget, there's another full square right below, right under it. So
yeah, no question. There should be some serious moves coming out of this thing as we break these different levels, either on the upside or the downside, because everybody has very strong feelings about this one, so it manifests in the price. Let me throw it over to you, and I just want to remind everybody, if you like the content, make sure to subscribe to the channel and like the videos for us. That would be a great thing. I see the E-mini.
There it is. It's funny. Last week you started out by saying, "I can hear the ice cracking."
Yeah, that's what it felt like for sure.
And it cracked just perfectly. All right. For this week, a couple of things. If people who are following us, okay, fine. I think you pretty much are hanging with the story, and the story being that we did have some cycles expire at the high, and so we were expecting a somewhat of a significant correction, and we're still under the same sort of rule set in that we're looking for a counter trend here, but we also have a couple of levels to watch to confirm that or not. So I think for next week, I'm looking at 44.70 to 75 range to be the key resistance level. And if we get above that, I think there's a higher chance of us going up to either test the highs or even maybe take it out. If we stall below that level, then I think definitely another leg down is in order. So so my pivot is really around 70 and 75, figure 72, somewhere in that range. So we need to really hold above that figure. When I say hold, we need to, maybe 4 hour can make air above it or something. I think that's enough just to give a reference so we know which side to look at. So that's my take on the E-mini, and we came pretty much down to support. I think midweek we talked about, or I can't remember, we talked about it last night. We talked about 43, 40, 50 being support, and we went a little bit under. I think on the Twitter we talked about 42.90 being key level. We got very close to that, and so we're trying to figure out where to go from here. It's either we're going to counter trend and back down again, or if we're going to continue to move higher. And along those thoughts, the weekly that we're looking at here sort of gives a better story. And I'm on the weekly, this 144 square turns out to be 44.88, figure 44.90, almost 45. So that's, we didn't make it up. That's just where the square sort of lands. And I would say that would be the extreme sort of level we want to watch on the larger time frame, that we either push over or we fail. And that's 44.88. So all these numbers are stacking up. But for starters, it's really that 72 number, give or take a couple of points, that I'm looking for the pivot and see how we manage that. But for now, in the weekly picture, let's just say, long as we're under this 44.88, 44.90, there's still a chance that we make a lower high and roll over. So you got to keep that in mind. Did I make any sense with that?
Absolutely. I mean, I think one of the key things too, and I'd like you to comment on it, that first sort of thrust lower, stopping at that support, that's sort of normal.
That's normal, yes.
Yeah, the first move, finds good support, and then you get the bounce. The key is, what's the characteristics of that bounce? Where does the bounce stop? And then those pieces of information will tell you a lot about, what's probable for the next move. And that's what we're looking at right now, is we're focused on this counter trend and seeing where it stops, where it rolls over. The price action is definitely not like a super crazy bull market bounce. So we're watching to see sort of who blinks first, the bulls or the bears, and that's going to tell us what the next move's going to be like.
And that's where that line comes in around 70, between 70 and 75, to see how we manage that. And of course, we have this old number from 44.92 that we use on the way down. We were calling that to hold if it was strong, which it didn't. So that's kind of the story. Basically, waiting to see what price action coming around 70 and 75. All right. And I know you're going to cover the mini a little bit, so I'll just leave it at that.
Sure.
Moving on to bonds. Last week, we talked about 162.08, this blue line we have here being key support, and it's been supporting for a while. And we also talked about it. 162 goes, 162.08 fails, and the next stop is 159. So I'm sticking to my story, and looks like we're going to go and test 159 next week. And resistance now being that 162.05 or 08 number right there, which happens to be half the square. And looking at the weekly, it's a square of 90 on the weekly. Really, the magnet is 158, 159 area, which happens to line up with what we talked about in the daily. And looks like this trend line is failing. So really, we got one left below. So
Mhm.
159, we're going to step this little at a time because bonds haven't really been moving in a meaningful way last couple of few weeks. It's just been chop chop. So we got to take this out step at a time. So next stop being 159 right in there. You want to add anything to that, Ben?
No, my number's like at 160 that I think we're going to probably test. We're at the lower end of the channel, this consolidation. So I think you've summed it up. We just got to take it one level at a time here because it's just really been in a tight channel for months now.
Mm-hmm. And it's funny, right before the drop, we went and kissed that line, exact the cross before the drop, right? Everything lined up there.
And now we're on the bottom channel line. We'll see what it does, right?
Yeah, bottom test a little bit. Yeah, it's right around 59. It just happens to line up. It's right there. So we'll see how that works. Now, if that goes, I think then we're ready for new lows. I really don't see this area holding. So we got to watch that. That's a really key pivotal level to watch.
Agreed.
Looking at crude, what can we say?
Crude had a nice week.
Other than buy.
That's BUY, not BYE, hopefully. Hopefully you're on the train.
So bye-bye to all the bears, eh?
Right.
So yeah, crude's fine, is following the map, stopping at all the support. You can see the low last week. It was right, we talked about, I was banging on the 69 being a key level to hold, and we came right down to it and bounced, and looks like we're on to, towards 79. There is a ABCD completing around, what is that, 76.50. But
yeah.
But to make the picture complete, it would have 79 would be the ideal place to run up to. And the weekly, pretty much the same story. Not to harp on this too long. If you go back and look at weekly, the square is really 72 is right up here around 78, 79. So that's the number we're looking for next. We'll have to deal with that when we get there, but that's the next level we're looking for.
Yeah, crude looks good. I'm going to briefly review it as well, but it looks really good.
And here's our gold chart. Last week we talked about how critical this the 1789 level is, and how if we lost it, we're probably going to go right to the half square around 1738, and that's exactly what happened.
That's what happened.
That's pretty much, we went to 89 and went right down to the square. Now the key is, it's possible that we consolidate here for a bit because the square being decent support. And if the square goes, I think we could probably go lower, and like you talked about several times, go flush out these other lows.
Agreed.
Gold, let me see here.
I'll tell you what, that's from a sentiment standpoint, people are getting really frustrated with gold and silver, which tells me, we're close. We're close.
Right? We're almost, we're almost coming into 90 days of correction. So that's pretty much when things happen. So we maybe be a little bit patient. And that's about 90 days is pretty much when people lose it. A lot of traders lose their patience and they kind of give it up, right? That's exactly when they start to move. So
that's it.
You got to watch that internal sentiment. Looking at the gold weekly, again, it's sort of on the weak side. Next support being along that weekly trend line that we drew in a while back.
But your weekly is a perfect picture of why traders are frustrated. It's in a triangle. Look at that triangle.
Exactly.
It's going everywhere and making no progress.
Especially after this sort of ABCD down on a weekly basis, right? And we don't really even take out the C high over here and then start to sell off. Yeah, I'm sure that's going to rub some people the wrong way.
Right.
So that's gold. Those are the two key levels. We talked about that.
Mhm.
Moving on to the dollar again. We've been bullish dollar, bullish crude, and they're both performing fairly well,
Chugging along.
chugging along. And like we say, the upside is around 94 for the dollar. And last week we were looking for this 92.50 level to hold, which, we messed around there for a little bit and pulled away. And now, in decent shape till 94. We'll figure it out when we get there, but we're looking at a week at a time. So that's a basic take on the dollar. Moving on to the weekly for the dollar. Again, the critical thing here now is, I think we dropped this up channel last week. We're pressing against the upper end now, and we do have resistance up here starting to show
you
up.
got your half square there.
Half squares there. So I would say, 93.65 to 94 is going to be, some overhead showing up there, and just to watch yourself, because we did, the lower end was down here around 91, 92, made up about 2 or 3 points. So now we're heading up into some resistance. Still bullish, but you have to watch these levels we're coming up on, being a half square and everything, and not to mention we're 36 days up. We're in the middle of the half square, so 36 weeks is something to take note of. That's a dollar. Euro, pretty much the same story. We had the box drawn in, had this purple line, the quarter square line around 1680 being support. So last week when the dollar ran, the euro sold off a bit, but managed to hold right along the support level. And it's holding firm. And there's also weekly support here. The thing is the way the euro is moving, if we break this quarter square around 1680, boy, it's gonna be a quick run down to 90, which is around 1460. So watch this level here, mainly because we took out this low back, the low that was put in end of March, and a false break, but really didn't make a big move out of it. We just failed right at the half square and came back down. So to me, it's not really showing a lot of strength. I'm guessing we're range bound, but watch the low. If this goes, we're dropping quite a bit, so it's worthwhile trade in there. And a quick look at the weekly, and the reason for all that support is probably this fork that's been working fairly well. We're starting to dip under a little bit. It's like
they're pressing for sure.
They're pressing for sure. So we're right there, and to me this is still holding, because we're closing above it and not really putting the air above it. But watching that daily levels would help figure out what's happening in the bigger time frame.
And it's interesting that bonds are pressing down at the same time the dollar's pressing up. So, you can see the flows are related.
Right. It's tight. Yeah. It's linked at the moment. So looks pretty good. All right. Let me throw it back to you, cover the commodities and the other goodies. So.
Excellent. Let's start off with a few things that Barrie's covered, just give you a little different look and see how, even though we do our own work, we're getting similar numbers. Adds to the confidence that these levels are important. So ES, you can see we made the high, came down, tested this level multiple days in a row before the sell-off started, and that's in the 44.80 area. We found support on the area where we're supposed to find support, which is the half square, 42.94, and we're bouncing.
Textbook move. Look at that.
Yeah, really, really nice. And so, everyone gets frustrated if they get short or they buy puts and you see something bounce. This is normal market behavior, right? It's not straight down. Yes, there are crashes. Yes, there are occurrences where things go straight up or straight down, but that's not normal. Normal movement is inhale, exhale, right? You see these moves, inhale, exhale. And here we've had the big move. It's correcting it. It's not correcting it in a manner that's, screaming, oh, we're going to all-time highs again. But if we stay below this, it tells you it's very weak. And if we get above it, then you say, okay, new highs are, this was just a one-day wonder, or, a 1 week wonder type thing. Look for higher prices. But right now, as long as we're below this broken trend line and we're below this full square in that 44.80 area, probabilities favor there's another move coming where we're going to test and most likely take out that low. So that's the kind of way we look at it. Once we see the market showing its hand, we then look and see what's the character of the counter trend. Right now, it's bearish.
I was going to say, I talked about the 72 to 75 area, and you have 80 right there. So that's really the zone that it seems to be. So
yeah,
that's the one to watch.
Yep, in the upper 70s, low 80s. This is the spot. On NQs, we've got a little different picture. Barrie and I were talking about this earlier. This area obviously was a strong resistance. It took a few weeks before it could get through. We broke through it with the sell-off, but now we're sitting above it. So NQs are in a little stronger position than ES right now in my work. It's this 15,125 area. If we sit on top of that and stay above it, it's bullish. If we slip back below it again, then we start looking at the lower targets on the half square here and the full square. But this 15,125, 15,100 area is really important, and something we're watching closely to see what the market's going to do with that area. Anything else you have on the NQs, Barrie?
No, I think you got it. It's
okay.
It's a good call.
So let's take a look at gold. Barrie talked about gold. I want to give you a view of gold here on the daily. On this, there's your spike low in early August. We rallied up, failed right at the full square, which is where we should find resistance. Came down, and we've been testing this half square area multiple times. It's around the 1744, 1745 area. It's important from a half square standpoint, right? We see that. It's also important because if you look back in March and April, it was the highs coming off that spike low. If we lose that, you got to look for, odds are going to favor a clean out move to take out the all these other lows we've seen in March, April, and now August. And it's probably going to go down to the 1650, 1655 area. So we're watching gold closely. On the other hand, if we hold here, that means we have a low, a high, we have a higher low. And if we can take out this strong resistance up here in this 1835 area, we might make some hay heading north on gold. So gold is on trial, on probation, so to speak. We're watching to see if price can hold this support. If it can, it'll be bullish. If it loses it, gold's heading lower in the intermediate term. Let's look at its cousin, silver. It's a little different picture in silver because this correction has been really just a big wide range, from basically 30 on the upside to, the 21, 22 area on the downside. And we're probing the bottom of this correction. Would it be unexpected if we came down, cleaned out all those lows and hit the half square at 2150? Not at all. But notice it's a little different than gold in that it's been a real sideways type correction in a big wide range. So we're watching silver as well. We take out this trend line. We're probably heading to this half square at 2150. If we can get up above and take out this downtrend line and stay on top of this full square in the 23, 25 area, silver will be back on the bullish track. Anything you want to add to silver?
Well, I mean, we're coming down to an area where it's going to be a decent value. So, we're basically waiting to see where support comes in and look for the next leg.
Yeah, and just trying to fine tune timing. We know, like Barrie said, there's good value here. We're just waiting for momentum to turn and be on our side so we can get involved. The rest of the commodities, we're going to focus today on. We're going to look at crude. Barrie's already reviewed crude, and we're going to look at the softs: sugar, cotton, and coffee. The rest of the commodity complex is the grains, the copper, natural gas, cocoa. They're all correcting. They're trying to finish up some corrections, not quite ready. Momentum's not there. So we're not going to cover them yet. We're trying to cover things that are actionable on this show. But just know that it's not that we're bearish on them or we're negative. They're just in a phase where they're either chopping, correcting, or sort of burning time, waiting for the next bullish phase to kick in. Let's take a look at crude before we get into the softs. So here's crude oil. Barrie and I have both been very bullish on crude, and you can see we found support on around that 60 level when they sort of attacked gold, silver, crude, everything in one day. And since then, it's been very, very bullish. The developments we saw this past week are we had gotten above the full square, came back, tested it, even pushed down, 1/8 like it does sometimes. But here we got a bar where it couldn't get below the square. And that's generally when you get a bar or two like that, where the lows sit on top of the square, that's generally a signal that, the bulls are stronger than the bears, and you're going to see strong price movement. Obviously, we've seen a good move up off of that. The half square, which is the short-term target here, is a little over 75. The full square, as Barrie was talking about, is up over north of 79.80 area. So very bullish on crude. Use pullbacks into support or trend lines to either add or initiate positions, because the weight of the evidence right now is for crude to head much higher. Let's go to the softs. The softs are really interesting. Barrie and I had a conversation midweek. We were watching them, and we both came to the conclusion that money was coming into them. For some reason, they all started moving like late Tuesday, early Wednesday in unison. So somebody was allocating money to this area, and we saw it in all the charts. Here's sugar. Sugar, the main thing about the chart here in sugar is we've been testing this full square. Again, Friday came up and tested, this half square. We tested it again on Friday, and it's pushing. It's just a matter of time before it breaks it. The key thing on this chart here is you keep seeing higher lows. I mean, you can go back to the bottom in May. It's just a series of higher lows and higher highs. And so, and this last one came in, it was a nice little raid. We've been going sideways and chopping, and then boom, they hit it hard. Again, look at that pattern I talked about on crude. 2 full bars where the lows could not get below the square. And that was a signal that bears were weaker, bulls were stronger. We pushed up to the half square. I think sugar looks good. For any daily pullbacks, you can look to buy it. The weekly support is around 1989. The full square support here is around 19.25. And by the way, all the levels that Barrie talks about and I talk about are in a spreadsheet that we share, a Google Doc. We'll tweet out and make sure you have the link to that, so you can see all the different levels. But sugar looks good.
And that level, and that spreadsheet with all the levels is also listed under descriptions of the video.
Mm-hmm. Well, you have your link there as well, right?
Right.
Excellent. Let's go check cotton. Barrie and I were talking about cotton earlier in the week and saying, hey man, something's going on here. We had this nice structure where it was, sort of a sideways, one big down bar, and then all of a sudden they started pushing. Don't know if this was a clean out move or not, but man, it sure looks like it. They pushed down, got below the half square, and then immediately rammed it back up. And Friday we closed right on important resistance here in the 96 area.
Mm-hmm.
Cotton, when it broke this triangle, it became bullish in my work. The triangle points to much higher prices up here, like in the 103 to 105 range. If you take the measured move off of the distance of the triangle from the breakout, very bullish on cotton. There's a couple ways you can play it. You can play a breakout and sitting on top of this full square in the 96 area. If it can do that, that's an all clear signal. Or you can play pullbacks, that give you another higher low if we can stay on top of this half square, or if we pull back in here somewhere on a trend line. You all have your different entry methods, but cotton is bullish. There's a lot of resistance here at 96. Once this 96 resistance is broken, 103 to 105 becomes a realistic target.
At least the half square level.
Yeah, at least the half square. Yeah, the half square is around 102, 101 and a half, 102.
Mm-hmm. Yeah, I think if 96 gets taken out, then I think 101 is a pretty clear shot.
Yeah, it's a high probability shot. All right, let's look at the last soft we're going to talk about today, and that's coffee. Coffee's been a really, really smooth, clean trade. We were in this earlier on the breakouts here. We were buying, caught this really nice move higher, and then we saw the triangle forming. And one of the key things that Barrie and I talk about is, you always got to try and zoom out, right? We look at this structure and we say, oh man, this is chop. I don't want to be anywhere near it. But notice where the chop occurred. The entire chop was above all of these highs that we made in May, June, July. And that's a bullish thing. So we had a bullish bias based on that structure. We're waiting to see the break of this triangle. We got that on Friday. Now this targets, 230, 240 area, full square at least. If we, just the distance of this triangle gets us up to the full square. So we're looking at a bullish move in coffee. It's supported by, as you can see, the other softs. There's money coming into this area. So any kind of pullback, any kind of, trend line you can buy off of, coffee looks good for higher prices.
Mm-hmm.
Anything you have to add on coffee?
Just a little sugar.
Yeah, you can have your coffee and your sugar this week. So, from a bigger picture standpoint, these are the ones we feel that are sort of locked and loaded, ready to move. The other commodities, they're still very bullish long term. The grains look bullish long term. They're just finishing up their corrections. Gold and silver we covered. Copper, the same thing. Natural gas, the same thing. Cocoa, same thing. They're all very bullish from a big picture, longer term perspective. The ones we're highlighting on the show here are ones that we believe are actionable now. So want to make sure we make that distinction. What's your main focus for this week, Barrie? What are you really focused on this week?
Well, everything we talked about, Ben.
Mm-hmm. Mm-hmm.
But the S&P is a critical point, at a critical point. So I'm going to be watching those upper levels that we talked about. And cotton, coffee, crude goes without saying. So those are key.
Excellent.
Yeah.
It's clear to us and probably to most people that things have changed in the markets. Volatility is heightened. So you got to look at making sure that the methods that you're using match with the price action and what's going on. Because when the market changes, you got to change with it. And that's the key message I'm trying to get out for the last week or two, is that, something has changed and we got to make sure we're aligned with that change. But it's a good thing, because volatility is the trader's friend.
Mm-hmm. Hey, on this coffee chart, did you call out the full square, what that level is at the apex?
The full square up here?
No, at the apex of the triangle.
Oh, down here. Yeah, no, the full square is around, it's in the spreadsheet. Yeah, it's in the 186, 187 area.
All right, got it.
So that's it's all bullish, and hope everybody has a great week, and we will post any updates on Twitter during the week. Otherwise, we'll talk to you next week on the next video.
All right. Thanks, Ben. Have a good week.
You too. Take care, everybody.
Bye.